make a little bit more money for us. And of course, this show is all about that. How can I get my money? How can I be able to invest it without me going to work a single day? Financial markets absolutely provide you with that opportunity. And in Uganda, so far, at least we have two segments of this market that have been well developed over the years and well furnished and well regulated as well by the different government regulatory bodies. And we are talking especially the stock market as well as the debt market, where on the stock market we are basically looking at listed companies that have decided to go public. These are companies that were started by individuals or by organizations or by a group of people, and with time they realized they needed a little extra income or a capital. They needed to raise capital in simple terms, and in the effort to raise capital, they looked for the cheapest way, and this is through listing on the stock exchange. I'm talking about the exchange, that is the organization or the body that is in charge of the listing rules, that is in charge of the listing scrutiny, getting to know which company is fit to be listed, and it is in charge, of course, of other securities as well that are listed on the debt market. So these companies came together, and of course a company, they agreed to go onto the exchange, and they went through that scrutiny, they went through that entire process, and of course, after following all the rules and issuing a prospectus and so many other things, these companies were able to list at last. And we've seen the exchange grow with time since its incorporation in 1997, when it was first incorporated by the Capital Markets Authority Act. And to date, we've seen companies list from one company to now 18 companies for the past 20 years. Well, not so big a growth, but we're seeing that at least we have hope for the future with new companies getting listed as well, and new stockbrokers on the market coming into the market, seeing that we're seeing also high technology advancements in terms of trading and so many others. In 2015, we moved away from the traditional open outcry system of trading to an entirely online trading system. And so there has been progress that has been made when it comes to the stock markets here in Uganda. And that is one sector as financial markets that we look at critically as an indicator of growth in the economy. And definitely when you look at the economies that have been able to make it into the top 10 economies of the world, looking at America, you're looking at UK and China and so many others, they all have a very well developed stock market. And the stock market is a very wonderful, is a very pivotal indicator of economic performance. When you want to know the economic performance of the United States, you definitely cannot skip looking at the New York Stock Exchange, because that is where most companies, multi-billion companies, are able to raise capital. And if they're doing badly on the exchange, it means there's something still going on in the economy that might not be right. So definitely, even us here in the developing world, for example, here in Uganda, one of the things that we should look at as very key in terms of getting us ahead economically should be the stock exchange. And it's one segment as Smart24 that we have promised that we will bring you all the necessary information, all the experts in the sector, the CEOs, the people that are regulating the capital markets space, and this is all to help you to understand how the markets work and how you can be able to participate actively within this market as a Ugandan, as a trader, as a businessman, as a student, as anyone who might be interested in investment. And so that's one segment that we have been able to cater for here on the show always. And we review companies depending on their performance daily. Because the markets open every Monday to Friday, that's why the show is every Monday to Friday, where we break down and analyze the performance of the previous day, because we cannot analyze the performance of the ongoing trading, because that keeps fluctuating, of course. But we look at the performance of the previous day and look at critically each company that has been able to gain, those that have been able to lose, and those that have been able to move the market, that is the top movers, and also looking at the indices, which are really very important when it comes to indicating the overall performance of the stock market. And so when we look at this category, it's very, very important that you understand before, of course, getting into the trading, because that is still a different situation. Trading in something you don't understand is one way of quickly losing your money, because that is why many people have been able to hop onto Ponzi schemes and so many other people that have promised them returns very quickly, and they have ended up losing money because they did not have the literacy, they did not have the financial knowledge or the financial literacy to be able to carry out these investments. And so what we are doing here, we're trying to get you informed of what's happening, the latest, so you can keep your hands on the dial. And of course, this will help you get ahead of many, many other people who may not be able to know about these markets. And this will keep you, of course, getting moving in terms of your economic progress and how you're growing the money that you're making each and every single day. The other segment we look at in particular are the debt instruments. Now, the debt instruments, just like the financial, the other stock market, we don't look at companies this time. We look at mainly borrowing and lending. So governments or corporate bodies or organizations may want to raise capital or may want to raise money to be able to use it effectively to provide services to the people, to construct roads, to build schools, hospitals, and so on. And so since government is a body that is, of course, mandated by the people, for the people, and this body definitely needs money, and they have a budget every financial year. Particularly our financial year ends in June and starts in June, of course. And so during this financial year, we have a budget which we have to finance as a country, as a government, of course, to provide services, to provide, to cater for government business, and to see that government is able to do all its duties promptly. Now, these bonds and bills, what we call the treasury bonds and the treasury bills, are financial instruments that enable government to do just this. And one way they help is, of course, government collects taxes, but the taxes may not be able to finance the entire budget. For example, look at this year's budget at 48.1 trillion Ugandan shillings. Government probably is able to raise will be able to raise about 22 trillion if all goes well. And so where is the other money going to come from? Because government has to carry on with its business. Of course, they have foreign banks that are lending them, of course, financial institutions like the International Monetary Fund and other sources like grants and so on from foreign investors and so on. These are ways government is able to raise money. But one fundamental aspect of this is local or domestic borrowing. And this falls under the debt instruments or the debt markets of the financial markets. And so these debt instruments are issued, of course, by Bank of Uganda, which is a body mandated still by the government of Uganda to be able to get to the public and collect this money. And government is able to access this money, use it in the due time, and of course, after collecting taxes, they are able to give back this money within a specific period. And now this money comes back, of course, with interests to the investors, because as an investor, you're not concerned with you helping government to provide services. You're concerned more with how do I get an interest, how do I get a return on my money that I've been able to part with for all this time. Because when you look at treasury bonds, they are quite long term. You have you're talking about 3 years and above, 3 years, 5 years, 10 years, and so on. So that's a pretty much a very long period for you to part with your money and not get a return on it. So what governments do, they really have this money and get to use it, but keep paying an interest after a specific period. And for treasury bonds, those are the long-term instruments, we have an interest paid after 6 months. You have a rate, of course, that is determined by the investors, and also depending on the central bank rate, because all these rates move in tandem. If the central bank rate is up, definitely you expect the rates on the bonds to as well move upwards within the same direction. Now look at it this way. If you have the rate, the interest rates, for example, right now the central bank rate has been increased to 9%, and this has been, of course, due to inflation. Government is trying to bring down inflation rates, and because we already passed the threshold that the Bank of Uganda set of 5%, we are standing currently at over 8% inflation rates, and so many other commodities have actually much higher interest rates. You're looking at fuel at over 19%. You're looking at food that has gone up as well within just a short period of time. Now, in order to control this inflationary inflation rate, we have the banks, of course, the central bank, which is the body that issues finances and other instruments to other commercial banks, come to increase the central bank rate to over 9% right now. Definitely that will help in reducing the money in circulation by probably promoting less and less borrowing. You will have less people borrowing because of the high interest rates, and thereby you will have less money in circulation, and probably that would help in the picture of the Bank of Uganda to curb the inflation rates. Now, coming back to the to the rates of the bonds and the bills and all these other debt instruments. When investors, of course, when the Bank of Uganda auctions the bonds or the treasury bills, of course, these days it's relative, and there are random auctionings here and the auctions here and there. And when this happens, of course, people hand in their requests maybe to be able to access these bonds at a specific rates. Those are people with over probably 200 million and above. They put in their, of course, their certificates and get to request at a specific rate. And after this rate has been discussed, after it has been evaluated, and the Bank of Uganda has come up with a specific rate, of course, they get back to the people through their primary dealers, that is the commercial banks that are able to access the Bank of Uganda for auctioning. And so they come up with the rate. This rate is discussed, and this rate is passed. When this rate is passed, you have your treasury bonds and treasury bills, of course, listed at this rate. What does it mean for a treasury bond to be listed at a specific rate? Well, you're going to be getting that interest after a year. It's an annual interest. However, it is divided into two parts. You will have, for example, if it is a 20%, I'm just taking an example, if it is a 20% interest rate, you have 20 divided by 2, which is 10%. Now, if you have lent government, 100 million, or let's say 10 million, let's not really put it up there. If you've lent government 10 million, and the interest rate is 20%. Now, 20% of 10 million is around 2 million. And so you have this percentage coming, of course, as money. And so this money is going to be divided into two. One, you will receive it after 6 months, and the other half, one half you will receive it after 6 months, and the other half you will receive it after the next 6 months, until the maturity, of course, of the bond. And this maturity period, when it comes up and the bond has matured, you get back your initial deposit. That is simply how it works. And so through these instruments, we are able to realize the government's services in society. We are able to see that government is able to construct roads, is able to raise revenue to construct schools and markets and all these other businesses. And these help the economy to grow and get boosted. And hence, of course, government is able to collect more taxes as well. And this will help it finance some of this debt. And this is a very simple segment. And of course, investors have always told us that this is almost 100% risk-free, compared to the other financial markets. We have other categories that we don't look at, mainly because they're not yet in Uganda. We have a commodities and raw materials market. That one looks at precious metal and other raw materials for goods that can be listed on exchange as well for people to buy. We're talking about copper, gold, that is for the precious metal, and then you can talk about maybe food products like corn, groundnuts, and so many other things that could be listed as well on the exchange, though we are not yet there, and that is where we are looking forward to getting. The third segment is the derivatives, which we also don't have yet in Uganda, but we are still looking forward to those. Those are derived from the other three markets, so they're just a little more complicated, but really the same thing. And so these show, of course, every Monday we look at this information so we can get to remind you, and for those that are joining us for the first time, to know that this is possible. You can become an investor, you can make money off your savings, and you definitely can get that return come in handy. Okay, now we're going to take a very quick break. When we return, we will give you some of these instruments. We'll start with the debt market, looking at some of the listed treasury bonds and bills, and then we'll cross over to the stock market performance for last Friday. Stay with us, we'll be right back.